Hey friends, I'm Anshul Arya and I welcome to our newest edition of Fund Manager View at Emkay Investment Manager. Sachin Shah, our Executive Director and Fund Manager at Emkay Investment Managers, will be sharing his views and insights in a candid conversation. Welcome Sachin sir.
Hi Anshul, thank you.
How are you doing?
All good Anshul, market's been more than kind, so thank you.
So we'll start with the question answer and round. So I'll just put in questions for you. So the first question is, we all know the Indian growth story is happening. Do you see an acceleration coming in? If so, which sectors do you see taking the lead from here on?
Sure Anshul, thanks for that question. So Anshul, I definitely believe that Indian economy is on an accelerated path, and there are multiple levers which is driving this. So first and foremost, I think the young and the aspirational population that we have, I think that's an amazingly lethal combination that we have to drive the consumption in this country. In fact, I would like to extend by saying that from consumption now we are moving towards consumerism. Okay. And when I say consumerism, effectively what we are talking about, people actually premiumization theme going in a big way. We are also talking about discretionary spending going up in a significant way. So as the per capita income, which is currently closer to anywhere in the range of $2,500 to $3,000, dollars, will go to the next $5,000 over the next 3 to 5 years. I think the discretionary spending is going to be at a different level. I think the second very important thing is that India's manufacturing play is coming into a too much of a forefront now. There are a lot of catalysts out there. I mean, there is tremendous amount of support from the government side, whether it was PLI scheme, whether it is also in 2019, government of India gave a very concessional income tax treatment to the new manufacturing plants. And I think another very big catalyst is in terms of the global alternate supply chains getting created. Now, when we talk about this has been a trend in the last 10 years, but post-COVID, this has got even further accelerated. And I think in this tariff war or the trade challenges that we are seeing, again over there, the emphasis on creating alternate supply chains is getting even more emphasized. So my sense is that there are at least 7 or 8 industries within the manufacturing space, whether it is your auto ancillaries, specialty chemicals, pharmaceuticals, electronics manufacturing, engineering, and within engineering, hardcore engineering, and also I would say power equipment, and also textiles. So all these sectors are where Indian companies have demonstrated they have the right to win, and they have demonstrated this by way of because they have the domain expertise, they can deliver the economies of scale, and also they respect the intellectual property rights. So we believe that this is a tremendous amount of mega trend over the next 5, 10, 15 years, which is going to accelerate India's manufacturing GDP. India's services has anyways been doing very well, and the domestic consumption is at a very different, I would say at a different level compared to what we've seen in the last decade or 2 decades before. So this consumerism is something because of the young and the aspirational population that we have, and obviously 65-70% of our population base is young. So I think that's where this entire acceleration of growth is going to play out over the next few years.
So I agree with you, sir, about the commercialization which is happening around. So thank you for your answer. Next question I would like to put up is, despite tariff wars and fiscal upheavals, your portfolio has been overweight on financial services and pharma. What are the key points that keep you positive?
Anshul, so basically, we have a very significant holding, as you rightly said, in the financials. But within financials, we have more of private sector banking. And we strongly believe that these leaders have a very strong franchisee. They have invested significantly in their distribution, in their technology stacks, and the kind of the size that they have created today I think they are really in an envious position. And particularly in the financial world, it's all about the confidence, the comfort, the trust, the reach, the products that you offer to your customers. And as I just mentioned, that because of the young and the aspirational population that we have, they are extremely tech savvy. So the kind of the technology investments that some of these large private sector banks have done, I think it's one of its kind today. So clearly they will be winning too much. I mean, they are going to win significant amount of market share over the next 5 to 10 years. If you think about it, in the last 10-15 years, private sector banking has won market share versus the public sector, and that trend will continue even more. But my sense is that in the next 10 to 15 years, some of these top leaders within the private sector bank will gain market share even from the other private sector, not only from the public sector. So we believe that they have tremendous amount of an edge, and that's why we are quite overweight on some of these large private sector banks. As far as pharma is concerned, our sense is that, I was just talking about this mega trend of outsourcing and global alternate supply chains. So over there, I think this custom synthesis, contract research and manufacturing, the CDMO space as we all call it, that is something again a mega trend. And there are few companies in this country who have been around for now more than 2 decades. And these companies have tremendous amount of great relationships with some of the large global majors, the Abbotts, the Pfizers, the Glaxos of the world. And those companies are very clear that they want to give more and more work to our companies out here in India. And as long as we are able to deliver in terms of the supply chain, we would be one of the biggest beneficiaries of this trend in going ahead. So that's one of the reasons why we are significantly overweight in pharma. So although it's pharmaceuticals, I think we've created or we've selected our space of being in the CDMO and the CRAM space. And of course, then we've also invested in a business which is part of the specialty pharmaceutical business in the global markets, including the USA. So I think these are 2 niche areas where we have selected and where we believe there is a very large opportunity over the next 5 to 10 years.
Thank you, sir. So I'll put the next question for you. The equal. Okay. The equal model has been your lighthouse of stock picking. Which stock has been your equal star stock?
Yeah, so we've been owning quite a few stocks over the last, I would say, 12 years. So the good part about our portfolio, Anshul, has been that we have a very strong vintage in our portfolio. So to put it like this, the top 40% of our portfolio today is nearly 10 years plus vintage, right? Which means we've been owning these businesses for the last 10, 11, 12 years. The next 35% is also now 5 to 10 years. Effectively, what I'm trying to say that the 75% of our portfolio is literally 7 to 10 years of vintage. So quite a few businesses have done very well for us. The top of the mind that comes to me at this point in time has been Divi's Laboratory, which we have been owning for more than now, I think 12 years. We bought it sometime in July 2013 or August 2013. We are already in May 2025. So we've been owning it for 12 years and it has given us a compounded return of as high as I think 28-29%. I think the next big winner for us has been ICICI Bank. Again, the stock that we've been owning for now nearly 10 plus years. I'm sure all of us know that ICICI Bank has been one of the biggest turnaround stories, one of the best compounders in the private banking space or even in the overall banking space. So that has also played out very well for us. And I think the third stock, again top of my mind, I'm sure there are a few more, but the third stock which has been at the top of my mind has been Sun Pharma, which again we've been owning it for full 5 years. The first time we invested was in January 2020. So it's actually almost 5.5 years. And since then again the stock has delivered upwards of 25% compounded.
I'm sure these stocks have been giving good returns to you too. So, looking into the portfolio and how you have been doing it, so you are still holding on to IT, despite the disappointment which we are facing in the numbers. So is it the AI wave that you are anticipating in the near future?
Sure, Anshul. So that's a good question, I would say. This is something which is at the top of mind of every investor, because IT as a sector, if you see over the last 20 years, has been a very secular sector. IT as a sector has given compounded returns. Each of the leaders over there, whether it's Infosys, TCS, HCL Tech, Wipro, all of them now today deliver profits upwards of $2 to $3 billion. In fact, Infosys and TCS delivers upwards of 40-50,000 crores of profit, which is good $5-6 billion. So there is hardly any industry in this country which delivers that size of profit, and again with very high profitability, with high ROEs, ROCs of 20, 25, 30%. So I think it's a great sector. The current challenges what we are facing are more to do with the macros in the US market rather than any structural challenges. These are, we believe, are cyclical issues, because if you see the order wins that each of these large companies have had in the last 18 to 24 months, they have been absolutely record order wins. So they have significant amount of orders that need to be executed over the next 12 to 24 months. Second, I think very important thing is, everybody is talking about AI, but the databases out there need to be compatible with this, so that they can be moved onto the AI platforms. Or even if you have to move a lot of this data onto cloud, which is the trend to my mind over the next 5 years, because cloud is now becoming almost pertinent for every company. So they will have to move tremendous amount of their existing data from their mainframes to the cloud. Now that itself is a very large opportunity for each of our IT companies. So we believe that over the next 3 to 4 years, they should deliver very decent returns. Also, the current valuations have become very reasonable over the last 6 to 9 months.
One side, as AI has been dominating everywhere, I would like to talk to you about your flagship fund, Capital Builder, which has given a return of 26.2% in the calendar year 2024. Would you share the key drivers of growth to enlighten our investors?
Sure, Anshul. So yes, calendar year 24 has been very good for us. In fact, the last 3 years, last 5 years, Capital Builder has delivered fantastic returns. We have outperformed by almost 300 bips to 500 bips on a compounded basis over the last 3 to 5 years. And even on a 12-year track record, I think we've delivered very decent returns of 16.5%. Talking specifically to calendar year 24, like we mentioned, like we were discussed actually in terms of our overweight on the pharma sector. So calendar year 24, pharma as a sector was actually outperforming quite a bit, and some of our stocks, whether it was DVs or Laurus and even Sun Pharma, all of them did quite well. I think the other very good stock for us for the last 24 months, not only calendar year 24, but both calendar year 23 and 24, has been our new addition, has been Zomato. So Zomato, or Eternal as they call it now. So Eternal has been, we've been owning this stock now for more than I think 2.5 years. And this stock has been one of the best performing in the market. And we had very decent allocation to that. And obviously with cumulative gains, the weights have also increased by default. So that has also helped us quite significantly. I think other than that, a couple of our private sector banking allocations also helped us quite a bit. And yeah, I think these were the 3 main drivers for us for calendar year 24.
As we are looking into a candid conversation, I would like to talk to you and ask a question about the investment mantra for our investors seeking alpha in current times.
Anshul, our philosophy has been very, very consistent over the last 12 years. And our philosophy is that we want to invest in very high quality businesses. And when I talk about high quality businesses, what goes parallel with it is very high quality management. This is something where we do not compromise, and that is where the equal model which you've been discussing is really what has steadied us very well over the last 12-13 years. Not a single business in our portfolio has had any challenge as far as corporate governance is concerned, and this is all thanks to equal. So I would say first and foremost, do not compromise on quality, both on the management and the business side. And I think the other very important thing is like today we all talk about trade war, sometimes there is COVID, some of the other uncertainties always there, which is trying to create uncertainty. But the point here is that every business that we invest in, we always try to figure out what is the value proposition that this business has for their customers. And if that value proposition is very strong and it is something which is not very easily replicable by the competition, that is something what we are very attracted to. And we have seen that over a period of time, these are businesses which are winners within their own sectors, and that is where the alpha is created.
So can we say pharma is your favorite sector?
Well, I wouldn't say it's favorite or non-favorite, but at this point in time, we believe that the mega trend is definitely there for the contract research and manufacturing in the CDMO space over the next 5 to 10 years. There is significant amount of tailwinds over there because the customers are queuing up at the suppliers, manufacturing plants, and they want more and more to come from Indian manufacturers because they want to de-risk themselves from their other supply sources.
Thank you so much, sir. That was indeed insightful views on today's interview.
Thank you.
Thank you for being on the show. Thanks for watching, friends. For more insightful ideas, thoughts and insights, do join us again. If you like the videos, please click like. If you have questions, please comment, and don't forget to share with your friends, family and person to help them learn more about markets, investing and growth with Emkay Investment Managers. Until then, happy investing.
Thank you.